Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the silver price chart doing something very interesting this Sunday evening. We're going to break it down in today's video. Also, we've got some stories might want to keep on your radar because they may have a big impact on the gold price and the silver price in the weeks and months ahead. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at stbullion.com/IRA. All right, so for context, silver recently broke out of this large ascending triangle on its long-term chart, and you may recall from the previous video, we were looking at a consolidation in the silver price. It looked like it was breaking out from this consolidation and also bouncing off this orange line, which is the top boundary of that large ascending triangle on this chart. Now, to zoom in here back to the 4-hour chart, we've got an updated picture here. And indeed, silver did have a nice rally as it broke out of that consolidation, trended sideways for a little bit. And remember, this is the 4-hour chart, so every one of these candles is a 4-hour period of trading. Then we got this big drop right back down to this orange line. Now, that drop coincided with this news. China confirms details of a U.S. trade deal. This news dropped, as you can see here, around 3:08 a.m. from CNBC. And if we look at the 1-hour chart of silver, this decline was right as that news dropped. Now, I'm not really sure why a China trade deal would have that impact on the silver market. I know China is one of the major silver producers in the world, and also a lot of silver is consumed there by industry and manufacturing, but why the price would plummet on that news, I'm not certain. But the important thing, I think, from a technical standpoint, is if you look, it tested that line almost exactly. Now, I get comments sometimes on these technical analysis videos where people say, oh, this is no different than, reading tea leaves or entrails or some other form of divination, but clearly, this line is an important psychological level for traders. And I mean, keep in mind, that's all these charts are, right? They're just the visual representation of the sum total of market activity, right? Everything that investors know, all of the information that's available to them, and all of the decisions they make in terms of what price they choose to buy things at and what price they choose to sell things at is all represented in these charts. So I think that there's a little more to this than, say, reading tea leaves. And again, today, when trading open, let's look at the 1-hour chart. We had a brief drop below this orange line. It was tested again. So that actually marks the 7th test. I don't have an arrow for this one yet on the chart. Then today, when trading opened, a plummet below it. Now we're back up above that line one more time. And switching back to the 4-hour chart, it looks as though maybe we're going to get another consolidation here. That would mean that probably sometime in the first week of July, this is Monday, July 7th, this kind of little downtrend line we have here, that's where it once again intersects with this line. So I would expect some kind of break out to the upside or downside to occur. However, given the sum total of data available to me, I am still expecting a breakout to the upside. I think what is happening here is that this line is just proving time and time again to be a new floor in the price of silver, because every time the price dips below it, it's rapidly met with buying, which drives the price back up. So silver appears to be doing a consolidation here. It's trending sideways. It likes to do this before a breakout, and I think that's what we're looking at from a technical standpoint. You leave me a comment to let me know if you agree with that assessment. Now, a few items in the news which may have a significant impact on the precious metals and the global economy moving forward. The first is geopolitical. So we know they've got the ceasefire in the Middle East right now between Israel and Iran, sort of the ceasefire that President Trump unilaterally declared via Truth Social. Thus far, it has held. However, my assessment of this is that both sides are rearming, reorganizing, and I don't think that we have seen the end of hostilities there. Unfortunately, I wish that we could see the end of hostilities there. It looks like that may not be the case. We've got the Israeli Defense Minister Katz now instructing the military to prepare an enforcement plan against Iran. Looks like to me both sides again are just rearming here and preparing for a resumption of the conflict. And we already saw what happened when this, what is now being called the 12-day war, kicked off. Not good for markets, not good for the price of energy, in that markets come down and energy goes up. However, there may be a safe haven bid, particularly for gold, in that case. Also, in Federal Reserve news here, Donald Trump has said that he won't appoint anyone to the Fed to replace Jerome Powell who doesn't back cutting interest rates. So that, combined with the new budget, which enhances deficit spending, especially in the short term, marks a very dovish predisposition for the president. Jerome Powell's term is up in about 10 months. However, Trump has even mentioned appointing a shadow Fed chair. Scott Bessent sort of walked those statements back, but the message is clear. A dovish disposition will be required for appointment to the Federal Reserve. So expect easy money moving forward. More money printing, more rate cuts, more of the same. And taking a look here at the CME FedWatch tool, it looks like the odds of a rate cut occurring are actually beginning to rise finally, an 18.1% chance of a rate cut at the July 30th FOMC meeting. Now that's over a month away, so there's a lot between now and then that could affect this, and just call it a gut feeling. I suspect we are going to see a rate cut now sooner rather than later, and I think that that percentage chance there is going to be on the rise over the course of the next 30 days, given the fact that Donald Trump is now appearing to apply some pressure to the Fed to begin rate cuts, and the fact that the economy likely is in desperate need of a new injection of liquidity because we live in an unsustainable debt-based economy. I mean, that's the bottom line. So, yeah, expect rate cuts in the near future. Once that begins, once the rate cutting cycle resumes, I think we will be seeing higher gold and silver prices. But let me know what you think about the topics we covered in today's video. Don't forget to like, comment, and subscribe. Please do share the video, and thank you all for watching. If you enjoyed this video, check out the one that's popping up on your screen now, and I will catch you next time. Smart Silver Stacker out.